Very good question. It can be good for you, and oftentimes it is good for you if you need it, right? So private mortgage, those are typically band-aid financings, right? B mortgage, they're there to help you with a specific income type or credit situation. So they can be good for you. I think the best way to help everybody understand why it can be good for you is to provide a few examples, right? So the first example would be debt consolidation. If you're in a situation where you have a lot of credit card debt, a bad credit mortgage can help you improve your credit and cut your monthly payment by as much as 50%, lower your interest cost from 20% to 9%, 10%, right. And then next year you'll be on your way to an institutional mortgage with a B lender or a private lender. So right. That would be one example, is you're suffocating in debt, right? And then if you own your home, likely be able to help you get a home equity loan and debt consolidation loan or second mortgage, right. To help you lower your monthly payment and get out of it and improve your credit. Another example would be a life event, right? So unfortunately the divorce rate is 50% in this country. So life happens, and that's divorce and separation is by far has the biggest impact to your finances, right? Among all the Absolutely. Other life events, there's a lot of costs, there is a lot of payments, right? Whether you're receiving payments or you're making payments. So it's going to impact your credit. And oftentimes people are very, very sentimental about their homes that they lived in for 20 years, right? So they don't want to sell. However, during a divorce, when you went from a double income family into a single income family, in the near term, it's really hard to qualify for the entire mortgage amount on your own, right? So when you go through a divorce, you may have to downgrade from a mortgage to a B mortgage, right. And even a private mortgage to right. Keep your home. However, the benefit that comes with it is that you do get to keep your home, enjoy staying in your home. You don't have to move your kids if you have
Correct.
Your kids.
Yeah, especially if you have family.
Exactly. Yeah. And then next year around, when your credit improves and then your income source, and let's say you start receiving the spousal support, you start receiving the child tax benefit, and then your income becomes much better.
Right.
At that time, then you can get back into an A lender, right?
Correct.
Or there are just simply times it's not a good time to sell your home. Maybe you want to sell after 2 years, your kids go to college, then you want to sell at that time. So this bad credit mortgage with a B lender or private lender can help you bridge yourself to that point, and then you can sell it at a point, at a time of yeah. Your choice that's most convenient to you,
and
that's the best for
time.
You. Exactly,
Perhaps.
More attractive times, right?
Right.
Yeah, so you may be paying a higher interest rate with a bad credit mortgage for a year, but maybe you sell it at in a better market.
Your equity.
Yeah, you make $100K more.
Equity.
So
yeah.
it's really important to have the bigger picture right. In mind, and that's something that's very important to have that conversation with the mortgage advisor. Another example would be for a real estate investor.
Right.
With banks, they typically stop lending a mortgage at 5 properties. I've seen 9 properties, right? And oftentimes a lot of people get stuck at 2 or 3, simply because their income is not enough to service right. those properties from the bank's perspective, right? Because even though some of the properties might be cash flow positive, they might be earning income, but when you try to qualify for a bank mortgage, they typically take a big discount on the rent you're getting, right? So even though you're cash flow positive, but from the lender's perspective, you're not. Right. So your income runs out pretty quickly after 2-3 properties. So with B lenders and private lender mortgage, and the other thing is, oftentimes for real estate investors, you have a lot of expenses. There's a lot of maintenance costs. There are a lot of costs due to tenant turnovers, upgrades, right? So your credit line is always pretty much utilized. So right. Sometimes I see a lot of real estate investor, sitting on a lot of property and a lot of equity, but they don't have the best credit, right? So that's when you need a B lender mortgage or a private mortgage to help you expand and continue to grow your rental portfolio. We have people use B mortgages and private mortgage to obtain 15 to 20% properties, right, to help them get the really high income Airbnb properties. So it was really, really flexible that way. And once you, and we have a lot of real estate investors, we love working with them, and we have our mortgage advisors are specialized in investment properties that can really help you structure the deal to get the most value all of your properties, to get the highest loan amount, the best interest rate as your portfolio grows. If you still have more questions, visit us at effortlessmortgage.ca.